Hello, my name is Heather Slusser. I am the University of Wisconsin Dairy and Livestock Educator in Marathon County.
And I am Sandy Stitchin, the University of Wisconsin Agriculture Educator for Taylor County. Together during this video, we will discuss the financial model, how to illustrate the management to decision-making processes, and the tools used to make decisions. A one-page fact sheet summarizes this presentation, and it's available online at the University of Wisconsin Center for Dairy Profitability. The financial model illustrates the management to decision-making process and the tools used to make decisions. We begin on the top left corner of this graphic with records. Records enable the creation of management reports, which in turn enable decision-making.
Keeping records involves collecting and organizing information about the business income and expenses. There are tools available or accounting systems to help you with record keeping. These range from the basic handwritten bookkeeping to Excel spreadsheets to software packages which keep records, write checks, determine payroll, and create reports. The information from the records feeds the generation of management reports. Reporting allows you to organize, analyze, and interpret your records into summary statements that indicate the farm's position and performance.
Position describes the assets. Assets are the tangibles the business needs to function: cash, equipment, livestock, and inventories. There are assets that the business owns, and then there are assets that others own. The position or disposition of our assets on a given day is summarized by the farm balance sheet.
Performance describes the flow of money through the business, income and expenses over time. Performance describes how well a business can make a payment, meet payroll, and it describes how much money is retained by the business. Farm performance is measured using the income statement. The income statement answers the question, did the farm generate an adequate return on the investment of your money, time, and labor?
The tools used to illustrate the business's financial position and performance are called financial statements. The Farm Financial Standards Council recommends agricultural producers create 4 financial statements. These are the balance sheet, the income statement, the statement of cash flows, and the statement of owner equity. Once you generate these statements, you will know a lot about the historical financial health of your business. The balance sheet and the income statement are extremely important because they outline the farm's financial position and financial performance.
The historical understanding of the farm business's financial position and performance provide a basis for which to plan for the future. Pro forma refers to the future view of the financial position and performance. It implies that the financial statements will be constructed to reflect the future view of position and performance. For example, what would the balance sheet look like after an expansion has occurred? The financial position of this future view is analyzed for feasibility, profitability, and risk. Pro forma financial statements are a complement to the budgets. Cash, partial, and enterprise are the commonly used budgets to generate the pro forma financial statements.
Pro forma financial statements would include a balance sheet, an income statement, and a statement of cash flows. The pro forma balance sheet would show the projected assets and liabilities of the business. The pro forma income statement would show the projected income or losses of that future year. The pro forma statement of cash flows would show the projected liquidity and operating cash for that future year.
Budgets are tools used to think through your decisions on paper before you commit money and concrete.
Financial statements, also known as management reports, serve management's needs. They make sense out of all the financial records or data that you collect, which in turn allows managers to integrate financial sense into their production decisions. It's a continuous model. Records feed into reports, which help shape decisions. Reports seek additional information from records and call for additional decisions to be made.
With time and practice, this will become second nature to you. I would wager that you are already using bits and pieces of this model in your day-to-day decisions. Our goal from this program is for you to become so comfortable that you always reach for this model when making your farm business decisions.
Thanks for spending time with us today. For additional information, please visit the University of Wisconsin Center for Dairy Profitability's website.
We would also like to thank Simone Jeté-Nantel from the University of Wisconsin River Falls and the University of Wisconsin Extension, and Nate Splett from the University of Wisconsin River Falls, Emeritus, and the University of Wisconsin Center for Dairy Profitability, along with Jenny Vanderlyn from the University of Wisconsin Center for Dairy Profitability for reviewing this video.